Okay, picture this. You open up a financial report and you see top-line revenue absolutely explode, jumping by 238% right out of the gate. Well, that is the exact mind-blowing number Gloo Holdings just dropped for Q1 2026. I mean, it's the kind of hypergrowth that literally makes Wall Street stop what they're doing and take notice. So welcome to The Explainer. Today, we're taking a really focused deep dive into the anatomy of a breakout quarter. We're going to unpack Gloo Holdings' Q1 2026 earnings report and see exactly how they're turning all this dense financial data into an incredible tech-driven success story, specifically within the faith and nonprofit ecosystem. All right, let's dive into this. Here is our roadmap for today. 1. The breakout first quarter. 2. AI as a force multiplier. 3. Landing strategic enterprise deals. 4. Accelerating through key acquisitions. And finally, number 5, the path to profitability. Let's just jump right into section 1, the breakout first quarter, and those massive top-line surges. Back in Q1 of 2025, Gloo reported $12.3 million in revenue. Now, fast forward exactly 1 year to Q1 2026, and that number has skyrocketed to $41.5 million. And this brilliantly illustrates the leap. That's that 238% growth we just mentioned. But you know what's even crazier? The analyst consensus going into this quarter was $36 million. So Gloo didn't just meet expectations, they crushed them by over $5 million, basically proving to everyone that their platform has found serious product market fit. Now, you might be wondering, how on earth did they pull off a beat of that magnitude? Well, CEO Scott Beck laid it out perfectly in the earnings release. He said, AI remains a force multiplier behind our platform, and our focus on applied AI uniquely positions us to deliver greater impact. And this right here is a totally crucial pivot for us today. We're moving away from just the what of those massive numbers to the how. They aren't just selling software, right? They're selling highly effective applied technology. Which brings us to section 2, AI as a force multiplier. It's time to ground the buzzword. Because listen, Gloo isn't just throwing AI around to sound cool. They're actually deploying it in super practical ways. Step 1, they've partnered up with Jessup University to build this amazing student success platform. It uses advanced AI to give coaches and parents real-time risk assessments and attendance visibility. And by the way, they're actually ahead of schedule on that. Step 2, they just launched Gloo AI Studio. Think of it like a massive playground for developers in the faith ecosystem, packing over 80 large language models, all with built-in, values-aligned safety guardrails. And step 3, they are actively building out this community by hosting a massive 48-hour AI hackathon in Boulder this coming October. They're expecting over 700 developers to show up and build solutions directly on top of their tech. So they're building the infrastructure, the tools, and the community all at the exact same time. Moving right along to section 3, landing strategic enterprise deals. Let's talk market share momentum. When you've got tech this good, you start reeling in the heavy hitters. In this single quarter alone, Gloo closed 5 brand new enterprise customers, and every single one of them is bringing in over $1 million in annual contract value. For example, they partnered with the Assemblies of God to modernize all their legacy systems, deploying Gloo 360 to serve 3 million members across 13,000 churches. I mean, just let that scale sink in for a second. They also teamed up with Wesley Seminary to pioneer something called Via Journeys, which is this really cool AI-powered ecosystem that connects ministry leaders with personalized mentors. These aren't just basic software subscriptions we're talking about. These are deep structural partnerships that weave Gloo into the very fabric of these giant organizations. Next up is section 4, accelerating through key acquisitions. This is how they're expanding their capabilities. So organic growth is great, but Gloo is also running an absolute masterclass in strategic M&A. First off, they announced they're acquiring the remaining 20% stake in Midwestern. Now, not only does that lock down cost-effective global tech talent for them, but it brilliantly wipes a $12.1 million liability right off Gloo's balance sheet in one go. Talk about cleaning house. Then you've got EMD, an established Workday services partner they scooped up, instantly injecting AI-enabled Workday expertise into Gloo's portfolio. And of course, we absolutely can't forget Westfall Group and Masterworks. Management explicitly called out these recent acquisitions as major contributors to this incredible Q1 performance. They are successfully stacking capabilities that just compound their value over and over. And that leads us perfectly into our final segment, Section 5, the path to profitability. We're looking at efficiency at scale.
Now, before we throw more numbers at you, let's just quickly define the exact metric Gloo relies on to measure their true operational health. It's called adjusted EBITDA. This is a non-GAAP financial measure, and basically it strips out all the noise, things like interest, taxes, depreciation, equity-based compensation, and any one-time, weird, non-routine expenses. By removing all of that, investors get a much clearer, much purer look at how the core, day-to-day business is actually running and generating cash.
Now, what's really interesting about this slide here is that we aren't just taking their word for it. This is straight from their earnings release, showing exactly how they bridge their net loss of $17 million back to their adjusted EBITDA metric. It's totally transparent, it's rigorous, and it proves that everything we're talking about today is grounded strictly in their audited financial reality. They account for every single adjustment, right down to IPO-related costs. And when we actually isolate that adjusted EBITDA, the trend is pretty undeniably clear. Just last quarter, Q4 2025, adjusted EBITDA was sitting at negative $18.6 million. But look at Q1 2026. It improved all the way to negative $11.5 million. That is a massive $7.1 million improvement in a single quarter. And get this, that negative $11.5 million actually beat their own guidance and analyst estimates. CFO Paul Seaman pointed out that this speaks directly to the operating leverage they are building right now. They're keeping costs tight while revenue goes through the roof, making their goal of approaching break-even in Q3 absolutely mathematically viable. So here is the absolutely crucial point to take away today: $195 million. Because they have so much momentum from Q1, Gloo boldly raised their full fiscal year 2026 revenue guidance to a staggering $195 million. They're also expecting Q2 revenue to hit $44 million, which would be a 172% year-over-year increase, with adjusted EBITDA improving yet again to negative $8.5 million. The financial trajectory here is pointing decisively up and to the right, marching straight toward that Q4 profitability target. Which really leaves us with this final, thought-provoking question. Will this tech-driven flywheel redefine the entire faith and nonprofit ecosystem? I mean, Gloo is uniquely combining real AI innovation, super smart acquisitions, and massive enterprise partnerships, all while marching steadily toward profitability. It's just a fascinating model of how to modernize legacy systems at a gigantic scale. I highly encourage you to keep tracking their progress as they push toward that ultimate Q4 break-even milestone. Thank you so much for joining me for this explainer today, and keep learning.